The market has always been a place where human nature is put to the test. It doesn't matter whether it's 2025. The emotions are the same: greed, fear, hope, desperation. The tools may have changed: algorithms, screens, and online brokers, but the human element remains constant. And it is that human element that destroys more traders than any market crash ever could. Before I ever placed a trade, I had a rule, a test, if you will, 5 steps, 5 questions that determined whether a trade was worth my capital, my energy, and my confidence. Because in this business, it's not about how many trades you make, it's about how many mistakes you avoid. The fortune comes not from constant action, but from waiting for the moment when everything aligns, when the odds lean unmistakably in your favor. Let's talk about that 5-step test before every buy. The perfect entry point isn't about luck, it's about discipline. It's about knowing what not to touch, just as much as knowing when to strike. The first test is simple, yet most traders fail it before they even begin. Is the market trend in your favor? Never fight the general trend. If the tide is going out, don't try to swim against it. The market doesn't care about your opinions, your analysis, or your predictions. It moves according to mass psychology, and the crowd sentiment is what drives prices. I used to sit in bucket shops watching the tape. I'd see a stock climb steadily day after day, and then traders would rush in, afraid of missing the move. But the professionals, the real operators, they weren't buying during the climb, they bought before the public caught on. They aligned themselves with the trend, not against it. When a stock is rising in a bull market, that's when it has the wind at its back. When it's declining in a bear market, every rally is a trap. The first test, then, is to determine which way is the tide flowing. If you can't tell, stay out. There's no shame in doing nothing until clarity returns. The second test: is the stock showing strength relative to the market? You see, not all stocks move the same way. Some lead, others lag. When I traded, I looked for leaders, those stocks that moved up faster and refused to go down easily. These were the ones that attracted real money, the kind that comes from informed interests, not the crowd. When a stock shows relative strength, while the general market hesitates, it's often a signal that something is brewing beneath the surface. But don't just rely on one day's action. Watch it over time. The tape tells the story. If you see consistent buying pressure, higher highs, strong closes, volume expanding on up days, you're seeing accumulation. The professionals are taking positions quietly. The test here is not about guessing, it's about reading behavior. If the stock shows strength when the market wobbles, it's passing the second test. The third test: is there a clear and logical pivot point for entry? A good trade must have structure. You can't just buy because you feel it's time. You must know where you're wrong before you're right. Every successful operator learns this the hard way. I did. Many times, I jumped too soon, bought a stock because I feared missing it, and the market punished me for my impatience. A proper pivot point is like a spring being compressed. It builds tension, price tightens, volatility drops, volume dries up, and then suddenly it explodes in one direction. That explosion confirms the trend. You must wait for that moment. Don't predict it, wait for it. When the market tips its hand, that's your moment to strike. The test here is to identify a level that, if broken, tells you the move has begun. That's your trigger. And the moment you act, your stop must be in place, no exceptions. You must define your risk before you place the order. That brings us to the fourth test. Test 4. Is the risk defined and acceptable? The great secret of successful trading isn't the ability to predict markets, it's the ability to control losses. When I made and lost millions, it was never the bad trades that broke me. It was the ones I refused to cut. A small mistake, if ignored, becomes a disaster. I used to say, it's never your thinking that's wrong, it's your staying wrong that ruins you. The market is always right. Your job is to align with it, not argue with it. Before every buy, you must calculate how much you're willing to lose if you're wrong. That number must be small enough that it won't shake your confidence or force emotional decisions. If you can't define your risk, don't take the trade. If you find yourself moving your stop loss after entry, you're not trading, you're gambling. I've done that too, and it never ends well. You must have the discipline to protect your capital because once you lose it, the market doesn't care how clever you were. Survival first, profit second, ego never. Now the fifth test. Is your mind clear and detached? This might be the hardest one. You can have the perfect setup, the perfect chart, and perfect timing, but if your emotions aren't under control, you're already defeated. Every great trader must learn to be cold-blooded when it comes to decision-making, not cruel, not reckless, but calm and rational. I've seen traders destroy their fortunes not because they lacked knowledge, but because they lacked control. They let excitement, greed, and fear dictate their actions. They wanted to be right more than they wanted to make money. Before every buy, I'd ask myself, am I thinking clearly, or am I reacting emotionally? If I was excited, I'd walk away. Excitement is not a trading signal, it's a warning sign. The perfect entry point feels almost boring. It's calm, logical, obvious in hindsight. That's because your decision isn't emotional, it's procedural. These 5 tests are what separate a disciplined operator from a hopeful speculator. Most traders lose because they rush. They see movement and think it means opportunity, but movement without logic is noise. You must filter the noise and act only when all 5 conditions align. Let me give you an example. During one of the great bull markets, there was a stock I had been watching for months. The public was ignoring it. The newspapers didn't mention it. But on the tape, I saw something different, steady accumulation, day after day. The general market was trending up, so test 1 was satisfied. The stock itself was stronger than its peers, so test 2 was checked off. Then came a period of quiet trading, a consolidation after a small run-up. Price tightened, volume fell off. That was my pivot point forming. I knew the professionals were getting ready. I waited. Not hours, but weeks. Then one day, the stock broke through its resistance with heavy volume. That was my trigger. I entered with my stop just below the pivot. Within weeks, it doubled. But I didn't buy more just because I was right. I waited for another setup. Discipline kept me from turning a good trade into a reckless one. That trade passed all 5 tests, and that's what made it a winner. But I've also ignored my own rules and paid the price. There was a time when I bought a stock simply because a friend was raving about it. I didn't check the trend, didn't analyze relative strength, didn't wait for a pivot. I let greed lead the way. The stock fell the next day, and instead of cutting it, I told myself it would bounce. It didn't. My small loss became a big one. That day I learned that ignoring one test means failing them all. You see, success in this game isn't about genius, it's about consistency. The market rewards patience, punishes impulse, and humbles arrogance. Every test you pass builds your discipline. Every shortcut you take weakens it. If you want to survive and thrive in this business, treat every potential trade like a test of your character, not just your skill. Ask yourself, is the market trend clear and favorable? Is this stock showing strength? Is there a clear pivot point to enter? Is my risk defined and acceptable? Is my mind clear and detached? If you can't answer yes to all 5, don't buy. Wait. The market isn't going anywhere. There will always be another opportunity. The amateurs chase, the professionals wait. The perfect entry point isn't a point at all, it's a state of readiness. It's when preparation meets opportunity and discipline meets conviction. Most traders spend their time searching for signals. I learned to search for alignment, and that's what this test does. It aligns your thinking with the market's reality. It keeps you from acting out of fear, greed, or impatience. It keeps you grounded when the crowd loses its mind. When you buy right or don't buy at all. When you lose small. And when you win, ride the trend until it stops. Those are the real secrets of market success. I've seen markets collapse overnight. I've seen fortunes vanish as fast as they appeared. But one truth never changes. Discipline is your greatest edge. The trader who waits for the perfect entry doesn't just win trades. He survives long enough to see the next opportunity. So, before you hit that buy button, pause. Ask the 5 questions. Test your trade. Protect your capital. because the market will always be there, but your capital won't be if you treat it carelessly. Remember, the market rewards the patient and punishes the impulsive. The perfect entry isn't about timing, it's about preparation. And the trader who prepares, waits, and acts only when all tests align wins not just money, but mastery.